As we mentioned at the top of the show, a slew of earnings reports having been released today. AngloGold Ashanti, one of the companies out with numbers. We spoke to the company's CEO, Srinivasan Venkatakrishnan, for more on the numbers.
I think the first quarter was a pretty good quarter under challenging circumstances. Gold price fell around $82 an ounce, but our earnings went up 6 times to around $113 million. We met our production guidance at around 900,000 ounces. And our cash cost also was below guidance at $894 an ounce. But importantly, what we managed to do is to pull down some of our other non-mine expenditures in terms of corporate costs, exploration expenses, and maintain the dividend to our shareholders at 50 cents a share. So overall, quite a successful quarter, and also a quarter which was not impacted by the strikes, which is what we saw in the fourth quarter of last year.
Now, speaking about your shareholders, moving in and looking at your share price, it hasn't performed. What will you be doing differently under your leadership?
I think with regard to the share price, it's not a phenomena just for AngloGold Ashanti, and I'm not being defensive. It's across the whole gold mining industry. I think fatigue has set in. But in our case, we're going to build on the work which we have done over the last 4 to 5 years, like Project One, to maintain productivity and process improvements through the business. What we also have is more focus on operating costs coming through right now, given the gold price environment, and also pullback in terms of exploration and corporate costs. So we're not sparing any element of cost across the business. We have rationalized the capital expenditure. But importantly, in AngloGold Ashanti's case, we've got 2 projects which we have invested in 2012 and 13, which is Tropicana and Kibali. Both of those pour gold before the end of this year, and they potentially bring, on a steady state basis, more than 500,000 ounces at low cost and good cash flow. So that's the first thing, that we've got a lever in our armory which we can use to improve near-term value. Secondly, what we're also going to do and build on what we have done before, but more effectively, would be to use our capital expenditure allocation as a principal tool to get value out of the portfolio. Typically, assets belong under 3 categories. Those which have got a good track record of delivering cash flows and returns, we'll nurture them, we'll invest in them. There's a second category, which are assets which have got potential, which we can turn around but require investment. We'll invest, but with a very tight leash in terms of capital control. And the other assets which don't fit our portfolio, we'd either restructure or sell off or harvest for cash. So you'll see more focus put in there with daylighting better value as we go into 2014.
Now, we just want to find out with regards to at what levels you can stay profitable if the gold price continues to fall.
The margins are pretty good, even at current prices. If you look at it, our cash costs are around $900, and that's before our cost initiatives are kicked in. If you remember, we are implementing a cost savings project under the leadership of Ron Largent to basically pull $500 million out of costs of the system. So it reduces cash costs by about $100 an ounce. The fact that we are bringing in 2 new projects also pulls down our cash costs. And even if you look at the last quarter, which was a low production quarter, the margins at including sustaining capital are still profitable at 1,100 gold. And that's notwithstanding the challenges we are facing currently. So there's ability here for AngloGold Ashanti to weather a low gold price environment. And importantly, our balance sheet is robust and we have got sufficient liquidity.
Now, what's your forecast with regards to the gold price?
It's a difficult one to forecast. As they say, gold price, I can tell you, will go up and down. What I can't tell you is in which order. I think the fundamentals for gold price still remain strong. But unfortunately, what we have seen in the market is certain trades which have kicked in, which have pushed the gold price down, thereby driving sentiment differently. So in the near term, one has to be cautious that the gold price could test lows. So one of the plannings which we do, scenarios, would be a low gold price environment. But you need to have flexibility to be able to adapt if the gold price rallies up as well. But if I'm asked to take a bet on where the gold price will trend in the next 12 months, I would say at current levels or lower. But the jury is still out in terms of the long-term fundamentals. I still believe they are strong, given what we are seeing from a macroeconomic environment point of view.